Right, well, welcome to Crypto Monday Zoom. It's Wednesday, 3rd of June, and it's all about global thought leadership. And we have a couple of upcoming Crypto Monday Zooms. On the 17th of June, we've got Henry McPhee. He's CEO of Streamex Core, and it's on-chain exchange for commodities, royalties, RWAs, and it's all about the bringing physical commodity markets into the digital asset ecosystem. Then on the 24th of
Tokenizing gold
June,
is a thing.
sorry,
I said tokenizing gold is a thing.
that's it, that's it. It's all about gold. And then Avi Mash on Wednesday, 24th of June, we had a fantastic session with Crypto Mondays New York with Avi. And so Lilia very kindly invited him to speak on Crypto Monday Zoom to reach a wider audience. Co-founder of 21 Rates, host of the Daily Stack, co-host of Bitcoin Economy podcast, Forbes recognition. So we look forward to that coming up. And then just a reminder that featured guests, the Crypto Monday Zoom is for the community, by the community. We welcome recommendations. It's all about thought leadership. It's people speaking about their passions, their journey, insights, trends, and technologies. And it's about a two-way conversation. It's not about shilling. It's the mission is educational, and it's all about our mission to help the community to learn, earn, and connect. Anybody have any announcement to make today? If somebody's got a product launch, a capital raised, a new job, something interesting in the industry? Lloyd? You're on mute, Lloyd.
Okay, I tapped to speak. So this week culminated, we are now strategic partners of two companies who are aligned with Google Ventures. One's audio and one's video. It's kind of interesting. One started with security cameras and turned them into AI. We're talking about a decade ago. They started with AI. And the other one, called Dialpad, they started off with voice over internet, and now they do call centers and agentic performance for customer service and sales.
Thank you, Lloyd. That was a great update. And if you could put a link in the chat, if you'd like somebody to be more aware of it, please feel free to do that.
I have a quick one.
Greg Kaufman, yes, sir.
Hey, sorry, I'm eating my lunch outside, so I'm mostly off camera.
Very
You don't need to
rude
see
of
that.
you.
But I joined Grayscale 5 months ago. Today we launched our hyperliquid ETF. It's got the lowest cost of the three ETFs. Hyperliquid, as you probably know, it generated $800 million of revenue last year. It's being used for interesting applications like pricing pre-IPO SpaceX shares. And we sponsored the Milken conference at the beginning of May. We were the only digital asset manager that was present, and just it was the chief investment officers and maybe the next level down of some of the most prestigious and largest pools of capital on the planet that were attending this. And I'd be in the elevator and I'd say, how do you fit into the overall ecosystem? They'd tell me. They'd ask what I do. I'd tell them about Grayscale, and I'd say, do you have any crypto or digital asset exposure? 1/3 of them, the answer was no. 1/3, it was we don't now, but open to education. 1/3 had exposure, often venture oriented, and also open to receiving information. So it was just good to be kind of in that ecosystem with those pools of capital and seeing digital assets having some reception.
Wonderful, Greg. Enjoy your lunch, and thank you for everything you do for Crypto Mondays. Really appreciate it.
Yeah,
You bet.
thanks, Greg. Obviously, it's super interesting stuff, and we'd love to have you come as a featured guest and and talk about your journey, Crypto Mondays Atlanta, and ending up at Grayscale, which is in a lot of ways kind of the center of this universe.
I'd welcome that. I mean, we're talking to some of the biggest pools of capital multiple times a day, often at night too, for Asia, Australia, Middle East.
Brilliant. Thanks, Greg. Anybody else in the room like to make an announcement? Great. Well, let's press on. Just to say, you can join Crypto Mondays. I'll put the link in the chat. The next one is if you want to start a Crypto Mondays chapter in your city, I'll put the link there for you as well. And then Agent Mondi, we've been building this AI agent over the last year. Alan Dumain on the call has been championing that with his army of AI agents. And it was soft launched to the chapter leads this last week. And so please, if you'd like to waitlist, just click on the link and put your name down, and we'll contact you as soon as that's available. And then if you're into decentralized AI, we formed the Decentralized AI Agent Alliance. Please feel free to join us there. It's very, very dynamic, very festive, has subgroups, and there are 2 monthly meetings. We have showcases and things happening at the forefront of decentralized AI. And then the Crypto Monday Zoom, I'll put that link in as well to join us so that you get notification of the upcoming Zoom calls. And then just before we go off to Anthony, I'd just like to ask Lou to say a few words. Just give us a little update, a little bit of your knowledge of Anthony, and what our aspirations are for Crypto Mondays.
Sure, terrific. Thanks, Robin, and thanks, Anthony, for joining us today. And we're up to last week. We had the launch of our 65th active chapter, Crypto Monday Ibiza. So great pictures from that Spanish beach town. And as Robin talked about, Agent Monday, our community management AI agent, is really the biggest thing that we've done in the history of Crypto Mondays. And we really think it'll help our organizers better organize and help our members better learn, earn, and connect. So we're super excited about that. And met Anthony a couple months ago during, I can't remember, one of the New York events that SVB put on, and it was really a great event, and a side event to a larger event, maybe during DOS. And obviously SVB is a bank that's been around for years and years, had its ups and downs, but very foundational to the growth of Silicon Valley over the last 30 years. And so I met Anthony, and he's the head of their digital practice, and he's really been moving the ball forward there. And so I'm excited to have him come and share with us his journey, what he's up to now at SVB.
Thank you, Lou, and welcome, Anthony. Thanks very much for making the time to speak to us. Really appreciate it. And I know SVB for many years, actually, and so it's really been the leading crypto bank. And yeah, we're very lucky to have you to come share your expertise and your journey with us.
Of course. Thank you. Thank you for the kind words. Is it easier if I present the slides from my end?
Yes, you go ahead and share.
Okay. Can everybody see this all right?
We got it. You want, yep, that's perfect. Brilliant.
Amazing.
Thank you so much.
Thank you. So we've been actively publishing research now for almost 2 years. We've been actively banking the space for about 13 years, and we've got 500 clients building on and around the blockchain. And when we went to think about what we wanted to write about in terms of our outlook for this year at the end of last year, where we kept converging is institutional adoption and how crypto is finally moving from pilots to enterprise production. And it's no longer permissible for a financial institution to simply say, we're thinking about it, or we've heard of Bitcoin. There are dedicated teams across them. So everything that we came back to converged on adoption and improvement to the financial system. So there's a lot to be excited about, as well as a lot to watch in terms of what that adoption looks like, what runs in parallel, what truly replaces. And then for folks like us on this call, I would say balancing that with where we believe or where we even know this train's ultimate destination is versus the timing and the sequencing and how everything comes out from there. So where we converged was 5 trends, some of which group a few in together. I believe the first 3 do. And they all come back to how crypto is rewiring finance as we know it. And while it's been 5 months since we published it, I think it's still relevant and we've already validated a lot of our predictions. And what you'll also see is that the predictions in and of themselves, again, probably aren't very radical or too far to the right of the curve for folks like us, but they're really a continuation of what's going on. So it's not a lot of net new, it's things moving forward from there. So if you're interested in learning more around how we support innovators in the space, what our platform looks like, and reading our research, you can check us out at svb.com/crypto. And closer to end of month, I'll release a new follow-up article to one that we did in August. That one was on the product era of Bitcoin, which is ways that we're seeing companies build around the network and make it more usable in the way of payments in an era of AI and just leveraging the power of the core and building alongside the core. This one will be an extension of that, but focusing on the evolution in Bitcoin credit, which is moving rapidly. And then following that, probably sometime in middle of July, working on more of an editorial piece with Arnold Lee, who's the co-founder and CEO of Sphere, a global B2B stablecoin company. And that piece will focus on dollarization that rises from stablecoin adoption, namely in emerging markets. So that one's a little more provocative and prompts questions that we should be watching for, not meant to be prescriptive, but hands off some observations and questions that globally different regulators, central banks, politicians, and bankers should be thinking about. So that's one that we're excited about and to watch for as well. So without further ado, let's dive into what we think are the 5 main trends this year. I'll also say that this is a combination of publicly available data, some subscriptions to overpriced research platforms, and also proprietary data that we have in banking the builders in the space. So this is one of those trends that's grouped along with a few others. This one encompasses all things institutional capital, everything from VC to DATS, and as well as the product partnerships and announcements that financial institutions are announcing. And what you'll see here is clearly bigger checks going to fewer winners and the median seed round going up. So I would say the definition of seed is changed altogether. Another thing to be mindful of is there was a pretty clear valuation overhang from the exuberance in 2021 and 2022. And I think that it's still difficult to raise, but there's probably less discipline coming from VCs around a handful of categories. I would say the top 3 are probably anything payments or stablecoin infrastructure related. And evidence for that, in addition to following the money, is you look now at the VCs that are prioritizing this, and they're publishing their own market maps of the stablecoin economy. So they're obviously bullish on it, and the dollars are following it. We said this was I have more on stablecoins in a further slide, but I think 3 weeks after we published this, Rain announced a $250 million round. So again, more continuation of the same. The other categories are, we'll get to these as well, anything tokenization, RWA, and then anything at the intersection of crypto and AI. So that's kind of what we're seeing mostly along the seed stage, but VC at large. A lot of VCs as well are not raising subsequent rounds, or they're pivoting to AI and they kind of go quietly in the night. There aren't a lot of announcements around this VC wasn't able to raise its 3rd fund, for example, and they're kind of just in more of a perpetuals on the harvest period. So definitely consolidation and discipline, but at the same time, a little bit of loose investing in those main categories. And aside from VC within this category, one thing I did not expect at the end of 24 was what we would have seen with DATs last year. And we've already seen new standards arise, especially around disclosing playbooks, holdings, best practices, things like that. But then also seeing new credit vehicles for some of these as well, including what we're seeing with Stretch for MicroStrategy, which is a preferred credit instrument. But we're already seeing this cool off and consolidation here as well. So more on this in the upcoming article. But Jack Muller's at Bitcoin conference about a month ago announced a proposed merger between Strike 21 shares and Electron, which will make them the second biggest holder of Bitcoin that's publicly traded at around 50,000 and a more vertically integrated company. So ironically, it feels like even the trends in this industry are consolidating. So what does this all mean? There was also a flurry, it felt like, between summer and fall of last year, where a lot of financial institutions announced things that they haven't launched yet, saying we've selected this custodian to help us launch this stablecoin primitive, or we are going to enter lending, or we are going to offer custody, or at least enable our clients in their brokerage accounts to purchase spot Bitcoin. And it's very important, I think, there to delineate between the press release and what's live and what volumes they have. So I think the biggest change from what we saw last year going into this year is probably what we've seen around DATs. I'll keep going for now because there's a bit of overlap with some of these, and then I'll come back after the fifth and open it to the floor if that works for everybody. So the next one, a continuation, is last year was a record year for M&A, and this is continuing as well. You saw the two biggest acquisitions that you've ever seen in the history of the industry as well as thawing of access to capital markets. Was a little bit of the year of the IPO. The Circle IPO definitely opened the door and legitimized the space as well. I think it's also important, semantics, nomenclature. I think it's also important to separate the rest of crypto and digital assets from stablecoins, even though we're operating on a lot of the same tech. So a lot of data that you look at, especially in aggregating investment and uptake, I would just keep in mind, how much of this is clouded by stablecoins, right? So for example, total market cap adjusting out the 300 billion of stablecoins, total crypto VC, adjusting out companies that are exclusively focused on stablecoins, not those who also support them. It's kind of difficult to arrive at accurate quantities for some of these, but it's a good qualitative reminder as you're looking at some of this. So both in terms of deal count and dollars, record year last year, expecting the same. We saw last month that Kraken acquired Reap for 600 million and expecting more. And I also would not be surprised if you see the biggest acquisition this year. So that would be at least 3 billion. And I also would not be surprised if you see a financial institution acquire a vertically integrated company for their IP, less for their customer base. That shopping list, I think, is shrinking because there's only so many good ones and so many good ones that have achieved certain scale. To acquire just a custodian, I think, is not the best use of funds. I think you need to also acquire other capabilities, also because the economics of custody on a standalone basis are fairly commoditized and will continue to face headwinds. Custody is really an avenue to acquire assets and introduce stickiness that thereby allows ancillary revenue streams for these companies. So if Zero Hash eventually takes one of the bids that has been given to it, you might see something like that. Again, this is just speculative. I don't have anything in mind. I don't know something you don't. It just would not surprise me. Again, building on a lot of these product and partnership announcements to buy rather than build and to actually own the platform. And what you're seeing here as well, which I can come back to, is a lot of these companies are not only working more closely with banks, but obtaining their OCC trust charters to be able to, and this is important to delineate, not become a full service FDIC insured depository and lending bank, but to be able to service their customers and move from this sponsor bank era into accessing the payment rails themselves and also custodying their own stablecoin reserves if they're a stablecoin issuer, which is why it was important for companies like Ripple, Circle, and Paxos. So I can come back to that in a little bit, but this, we're already seeing the continuation and it builds along the other one. I hear from VCs, especially at the early stage, that they feel that there's less quality and they also want to not give as big of checks because it's cheaper to start these companies now, especially with the onset of AI. And I think the corporate venture capital teams kind of have a dual mandate now across fintech and banking, where they're being asked for what is our strategy and what is our opinion of what's going on. And whereas before they may have just invested in companies as a standalone fund, now I think they're actively looking at more acquisition opportunities and then thinking through what more of the integration looks like rather than just investing in a growth stage company for the upside in the enterprise value that they would then exit in 5 to 10 years. So also, again, something just very interesting to watch and shouldn't be surprising. This is when you look at all the headlines together, which feels like that pace is picking up. I think the charts really substantiate it. And here again, present in the other trends, stablecoins really trending toward becoming the internet's dollar. I previewed this a little bit, but if you think about why, it's because we are making dollars programmable at the speed of the internet and also being able to introduce a new level of compliance into it. And what we see our clients do is not only are they building this technology, but they're adopting stablecoins in their own treasury for cross-border payments. And I think this chart really speaks volumes in and of itself. And I want to say in 2020, total market cap of stablecoins was maybe 5 billion. And basically all of that was Tether on exchange for people skirting capital gains taxes to not off ramp into dollars to then make future trades. To imagine the amount of Tether on Binance and BitMEX, for example. And while that still exists, and now there's more clarity on tax treatments, you are seeing this enterprise adoption genius pass last year. So it's all kind of coming together. And this seems to be where the financial institutions are dipping their toes in the water in terms of their foray into digital asset adoption. So the next one would be what we're seeing with tokenization. We classified prediction markets as real world assets. I believe there is nothing realer than gambling, but you could argue that even though there's the use of smart contracts and that it really is kind of its own thing. So you could adjust out, for example, Kalshi and Poly market, and I think the chart would still keep the same shape and a lot of the same lines. But if you are to look at RWA as a whole, or even specify on prediction markets, it's pretty clear that that's the biggest consumer application since NFTs. And if you just look at the timeline here on the x-axis, the first four, almost, yeah, all of them to an extent are NFT focused or almost exclusively NFTs. And then they, ironically, the NFT peaked happened at the same time as the valuation overhang across tech VC at large. And then we all know what happened with adoption there. So what to watch for outside of prediction markets? Well, we have validation now in that Ethereum is what brings crypto to Wall Street, or so it seems. And we're starting to tokenize large financial instruments. This is validation, but it's a far cry from replacement in terms of the volumes that we're seeing. And if you just think about the size of these markets and how much money moves every day. But we did see tokenization of equities, fractional ownership, and there's just more of this coming along. Also, quotes from some pretty prominent figures like Larry Fink talking about what we can do here. So the prediction is that this will continue, and you might be having more tradable assets. It's not just about issuance and then showing a wrapper as an IOU. And finally, this stands probably less apart, and this one you should think more about a vision of the future rather than what we're already seeing today. But I think this is potentially the most interesting chart of the deck, where we observed that crypto companies that either identify as decentralized AI or have announced an AI native product are 2 of $5. And we know that all these companies are using AI, but I'm talking about an AI first product and then also leveraging the power of blockchain networks. And if you think about the incentive model, does crypto need AI more than AI needs crypto? You think about censorship, incentives to validate accuracy of answers, protecting private information. How much more power do you want to give to the monoliths that are kind of running the table right now? So that, again, we're not seeing a lot of consumer adoption. We are seeing some of the larger players integrating AI inference into wallets. There's a lot being built around agentic AI and agentic payments, and you can envision agents being given discretion to make payments under $5 with certain parameters set by a human, but then they transact with themselves. So the prediction here is more keep your eyes open, and a lot of what we'll see here won't necessarily feel like it's crypto. It'll just feel like fintech continuing to modernize with the benefits of agents and crypto under the hood. And if you just think about the application of a blockchain, and this comes across all the trends, but I think it's especially true here, it proves that a digital object was in one place at one time, and it's the most revolutionary innovation in ledgering and database technology. So in terms of what else is going to happen or what we should think about, I would say all innovation in this space is an evolution of that idea. So in some instances, it makes sense to have a centralized database that is closed loop, and you wouldn't want to broadcast transaction history, or you wouldn't want to make access to the database, even if it's anonymized, you wouldn't want to broadcast it across multiple nodes. So you might think, I can make the counter argument, trust me, but you might think, for example, why does a bank need to open, why does it need multiple instances of its database, and doesn't it want to collect the information privately, or government records, for example? Or there might be part of it that you want to publicize. But that's something I always come back to, is if we need multiple copies of a database and to prove that an object, even without specifically identifying the object, was in a single place at a single time, that's a good way to think about where innovation is going to occur and where the capital will enable that. So that's what we're seeing. I have some bonus graphics that I can share that didn't make the article that we left on the cutting room floor. But I would, just to bring it to a close, what I would say is this isn't meant to be comprehensive. And one thing I think we're seeing we haven't seen for a while is that the UX is massively improving. It's really hard for someone who's not curious or doesn't question the financial system to learn about this on their own. I didn't hear anyone last year say they opened a Coinbase account for the first time or bought a ledger. But I would say things are becoming more accessible. And the promise of blockchain for identity verification is reaching a wider understanding. There's a lot of mixed opinions around this, but I still believe that applications around supply chain management, tokenized gaming are as important, and those are also potential on-ramps for more users. But the overall theme here, again, is crypto's infrastructure. And when you can make these capabilities invisible and regulated and usable at scale, it's going to continue to improve a seamless experience across everyday financial interactions. So appreciate you offering the time, and happy to take a couple questions.
Robin?
Vassallo, great. Thanks very much, Anthony. That was magnificent. Sorry, I was just doing a little bit of social media there.
Thank you.
Your pleasure, dude. So yeah, thanks so much, Anthony. So anybody who has any questions, please put up your hand. And in the meantime, Lou's going to do a little bit of Q&A with Anthony, just to find out a little bit more, dig a little bit deeper. But there were some fascinating insights there, which are pretty cool and clear, actually. So thank you, Anthony, for sharing that with us.
Of course.
So yeah, thank you very much, Anthony. So obviously on the RWA front, that's the hottest thing in crypto today. And I just think within that, and that's how the graph broke out into different categories, but geographically, where are you seeing it? It feels to me like New York's really the center of that in the U.S., but it's also happening around the world. So I just wanted to see kind of what insight you had there.
I would totally agree. Last year, when we did our outlook for 2025, we actually spoke to where companies were incorporating. So companies that had recently raised, where their formation documents pointed to, and I believe it was something like 1 in 3 were in New York City. So before, I would say San Francisco has definitely become the center of AI and has lost a lot of its mystique around crypto, although there are a lot of builders there, there are a lot of offices there, and some companies that were formed earlier are still based there. The other thing is crypto is remote by nature, and it feels like we all make our quarterly pilgrimage to New York to meet with the other folks who are brave enough to live there. But in terms of in-office and formation, it's happening there. I'd say a little bit of a divergence with the VC. It still feels like you got to go to Sand Hill to get in front of the brand names to raise the capital. And then I'd also echo what you said, Lou, about internationally. There's a few hubs that are popping up, but it feels like almost everything that at least has a focus on the US market is being routed through New York.
Yeah, it's interesting to hear. So I see Lloyd's got a question.
You're on mute, Lloyd.
You're muted, Lloyd.
Tap to speak. Okay, tap to speak. One of my major interests is in the global remittance market. It's not just how do you send, what do you send, et cetera, how do you market, et cetera. But the main thing that people are ignoring that I find is I set up Bitcoin. And the problem is at that time, there's a good amount of expense, the on-ramps, et cetera, but it's also slow for settlement. Then I found out all about mobile money, PIX, and all the other private networks, whatever. So the point is this, okay? The transfer of funds internationally from individuals to individuals. Where's that going to go? Where do you think?
Great question. So a lot is coming, okay? And I think where financial institutions need to innovate and support capabilities is at the on and off ramp. And then it's a race to the bottom on fees. Their goal will be to acquire cash deposits and also maintain that visibility. But to your point, they have to be able to enable these capabilities without introducing latency and without introducing incremental costs. I think about, we know this is better, okay? We know this is a better payment rail, but there are a few things that need to be ring fenced as well. No takebacks, no chargebacks.
Right.
There's a lot of things that you need to think about. Ironically, I've talked to a lot of founders building around agentic payments, and they actually don't want to build around stablecoins. And the reason for that is because of the customers they support. So if they're supporting SMBs, they actually prefer to pay out in batch and then maybe extend credit. So it blows my mind, but sometimes in their view, 30 days settlement is favorable because it allows reconciliation. It can accommodate for returns of products and things like that. I would say, can we just process a corresponding credit to the original debit? But I do understand why you would want to use the legacy thing. The other thing I think to consider in your premise is that stablecoins are not meant to be perpetual dry powder. Ultimately, the spot of stablecoins, if you will, is the dollar. So while you can treat it as dry powder and think of it as an extension of your checking account or even account for it as a current asset, ultimately there will want to be an off ramp, and there is some friction. And I still think that there will be delays and things will be expensive for a while. We need to figure out ways about that. So maybe it's not stablecoins, maybe it's tokenized deposits built inside a perimeter amongst multiple consortia of banks. But if you think about a classic use case, you're running a company, you have developers in Ukraine, and you send them USDC, they still need to pay their rent, and they don't have a mechanism to off ramp. And when they do, they still need to convert to their local currency.
So, may I just interject for a minute? I mentioned something that most people here have no idea what it is because we don't have it here in the United States. And if your companies are headquartered here in New York City, 1 out of 3, they don't know about it either. It's called mobile money. It goes to telcos right now, 70 different countries. It's immediate. There's no debt. So that's where it's at right now. Why do they have to adopt something new? What we have to do is adopt a way of transporting, keeping the costs low, et cetera, and certainly liquidity and speed. And it's there already. Whether it's in India, whether it's Pix in Brazil, whether it's sending mobile money to Vodafone or whatever. The point is this: that's the structure in place right now. It's working.
Yeah, so is stablecoin, right? But there are reasons.
No, they're not using stablecoin. They're not using stablecoin. They're using Bitcoin.
I didn't say they. I said the world. Right. The world is not using these things for a reason. They can't press a button and use that to pay everybody in the world like they can the legacy system today. I mean, I thought that was an interesting point, right? Is the legacy system works for everybody, and it's hard for anybody to adopt something new that's not broadly used.
Yeah, it's a good point too, Lloyd, in that I actually didn't, this kind of came across my radar maybe a year ago where so when we visit as tourists some of these countries, we think it's a cash economy, but actually how they're transacting with themselves are through these centralized intermediaries. You can even issue an IOU, for example, or pay someone digitally and then them go receive the cash in an ATM. There's a lot of innovation that's happened there. The question is, what happens in the last mile? What sort of conversions need to take place, and what are the unit economics? But it's fascinating. And then you see like, for example, we'll cover this in the article with Sphere, but the Japan right now is really encouraging all of its handful of large banks to issue yen-denominated stablecoins, because there's a concern as well as what happens to local currencies as the dollar proliferates in those emerging markets. I wouldn't call Japan an emerging market, but they're going to face an issue, right? Their currencies will weaken as dollars dominate more.
And also the US government can seize anybody's assets if it's in, US regulated stablecoin. That's got to be a concern of lots of folks. What are you seeing in terms of on the RWA side? In terms of what's actually trading? Like what has liquidity? Like you see all the stuff on, Hyperliquid, the FERPs, markets like oil on the weekend that are already a very deep market. But are you seeing kind of any of the crypto native markets getting liquidity?
Not really. A lot of it is a wrapper or runs in parallel, but has not replaced. I think there's more to come there. While I wouldn't say this would make a top prediction, but you can kind of see where this goes, right, Lou? If you just think intuitively from a first principles perspective and where Wall Street wants it to go and how they want to have a hand in the facilitation. So they have their fee income, and again, they keep visibility and they keep their assets under management. But I haven't seen a lot of that direct adoption.
Thanks. Alex?
Hey, everybody. Alex Davidoff, Head of Market Liquidity here at XDC Network. Anthony, quick question for you. I'm wondering where you see most of the RWA and tokenization building happening in the ecosystem. I imagine, obviously, not too many people are building RWAs on Bitcoin. So I'm kind of wondering what chains and what sectors that you see most of the tokenization happening on, and where they're working with SVB to kind of accomplish that, if it's more of a just strict banking and custody, or if you're expanding more into the tokenization efforts yourself with partners like Securitize and Tokeny.
Yeah, great. Another great question. So this comes down to relativity among a spectrum. So if you're institutional party, no one's going to fire you for buying IBM, right? So building on network with biggest value that it's securing, you'd want to go with Ethereum, trade-offs aside. One other thing I'm also seeing in smaller increments is there are really some ambitious biz dev teams at some of the foundations from, let's say, the top ranks, 15 to 50 in total market cap. And then I talked to founders that are building on them, and I asked, why did you pick this chain? And they said, oh, we got, the equivalent of a $250,000 grant from the foundation. Like, okay, so you didn't pick the chain because it fits your use case, or it's technically superior. Like, no, they basically subsidized us. And I guess that's a good enough of a reason. So you're starting to see more aggression there from those biz dev teams. I think for large financial instruments and settlement, it's pretty clear that that's going to be Ethereum. I'm not telling you anything you don't know, but in terms of dApps, Solana, right? And then the question is, what L2s of Ethereum as well, and what are they known for, and what network effects can they accumulate?
Apologies, you said in terms of dApps, Solana?
Yeah, just in terms of generally speaking, seems to be a chain of choice.
And what dApps are you referring to?
What was the question?
What dApps on Solana lead you to think that they're kind of the home for dApps?
Well, so they market themselves a lot as that, and I think the settlement time and the fee structure invites a lot of builders on top of it. And then if you also think about, I haven't heard about this for at least over a year now, but they do have their own phone. So, they're really trying to encourage adoption there. But I can't name to you a Solana dApp that I use.
Okay. Okay, thanks.
Yeah.
Okay, thanks very much for the question. Shameless plug for everybody here. We're hosting a bunch of events at XDC in our office and also separate in Williamsburg. Send me a note on LinkedIn, Alex Davidoff. I'm happy to send you information if you're able to join in New York next week for ETH conference.
Great, Alex. Thank you. And Anthony, are we stuck with the dollar then? Is there any other way or an other currency emerging, or because it looks like, I mean, actually I've heard different to you. You were saying that you know that they didn't want to go with stable coins, the USD stable coins, but we had Vicky Fu and a few others over the last couple of weeks, and they're saying it's all going in the dollar. The dollar is going to be the transacting currency between AI agents. So
Yeah.
what
Doesn't
else?
have to
Is there a
be.
possible other scenario or not?
Doesn't have to be, but it almost feels like it's at least a necessary intermediary step. And maybe as an adjacent look to where you're coming from, Lou, we talked about this in Vegas briefly. A lot of people thought that Bitcoin was going to have a clear path to surpassing the market cap of gold without institutions buying it, without them instrumenting it, without them introducing wrappers and leverage. So there are a lot of, for example, there's a lot going on around Lightning where you can issue stable coins, and Paulo of Tether has spoken highly about it, but issuing Tether on Lightning. The other thing about stable coins to think about from a design perspective is a lot of them transact on multiple coins, but then it comes to the stable coin issuer to reconcile end of day and maintain the peg. And then Lou, I also finally met with Tachi yesterday as well. So I think there's a lot that you can do in leveraging the power of the Bitcoin network. But it seems like for now, as long as people don't start boycotting the IRS, we're going to rely on, form of tokenized dollars for payments. And where that comes from, how it's issued, what the rail, so to speak, or the chain that it transacts on can change. But I think this is, again, at least a large stepping stone on the way to, hyper Bitcoinization or other parallel concepts.
Got it. Thank you, Anthony. Ali?
Yes. This is Ali. I do have a question for Anthony. This was going to be about the Base network because they recently allowed more than 100 merchants now are eligible enterprise in their network. So they're actually accepting through the checkout, rolling out a stable coin acceptance to all eligible enterprises. And I do have a question in this regard. And what do you think the future of the merchants are accepting the stable coins through the Coinbase? And where do you see the potential of growth with Base and accepting the stable coins and actually is expanding out to broader network of the merchants? And how do you actually position the protected settlement that Base will allow? If you see any future with that, the merchants are being protected through these transactions, and where do you really see the Base is actually positioned themselves in this field?
Yeah, that's a good question. I would also think about, for example, the other fintechs that are acquiring capabilities for adjacent use cases, like when would you use Stripe vis-a-vis Bridge, for example? I think one of the most fundamental, I don't have like a very specific outlook on this, but one of the most fundamental things I think about with Base, if you're familiar, if you've ever, for example, requested a price sheet from Coinbase for custody, a lot of the reason they win the business is twofold. One, they won the bid as the primary custodian for virtually every ETF except Fidelity, and now a couple others are are changing, but two, they don't charge for anything with USDC. And they're trying, you know, they have a vested interest in it. They're trying to accumulate assets under custody. But as long as that's the case, people like free. So I don't have a good answer, but
they're now accepting the USDT and USDC plus the USD settlements. No crypto integration required. Actually, that's kind of making a lot of sense for a lot of merchants. I'm also in the field offering something similar where I kind of want to see and run this from your perspectives, like where and how a base could be the ultimate network that offers into a unified system for the merchants, because they're kind of waiting for this protected settlements with no crypto integration required. So this was my question, and I kind of want to see where and how this is evolving, Anthony.
Yeah, I'll start paying more attention to, and keep me updated. I think that's interesting. The other, again, not to like beat a dead horse with first principles, but I wonder generally around what L2s do to Ethereum, and then I wonder about the centralization of the developer behind Base, right? I don't think it's necessarily a bad thing, but there is potential there. You know, it's definitely counter to the philosophy that Satoshi outlined in the white paper. Doesn't mean it's bad, but certain things to watch for as you think about incentives. But as for a merchant, if it does the thing, then everything works, right?
I definitely would like to inform you about it. I actually would like to connect you on LinkedIn, send you a small note, and then, you know, open for the conversation. Anthony, thank you.
Sounds interesting.
Thank you, Ali.
Thank you.
And
thank you, Robin.
As a last thing, Anthony, can you explain to us, for the people in the room, like what is your main target market, and what are the kind of services that are most beneficial for that target market that you provide?
So we'll support any company that has raised outside capital that is compliant. And the approach that we take is we conduct diligence up front so that we can commit to the business, even if it's just for a checking account. And the reason for that is that we can understand the business and then support it for whatever they need. So if they have an inquiry around other banking products like a credit card, an FX facility, you name it, we just look at them on a per product basis for eligibility. We don't just designate them as you have a nexus to crypto, go stand in the corner for 10 minutes. So virtually any vertical you can think of, there are a couple limits, cannot support any crypto ATMs, anything that privacy is a little bit nuanced, but what's certainly prohibited is anything that obfuscates transaction history, like a mixer or a tumbler. But again, anything that has a US entity, some sort of focus on the US market, it can be a multinational company, has raised outside capital and is willing to go through upfront diligence, we'd be happy to have a conversation.
Thank you. And last from Lou, before we wrap
Thanks
up.
a lot, Anthony, for the time. I always like to finish with, when you're here next year, what do you think we're going to be talking about that we weren't talking about?
Yes.
I think at the end of the day, I'm a Bitcoiner. I don't totally write off other things. I've learned my lesson in leverage trading, NFTs, just trying to be cute. And then I just think the most interesting people I speak to are not necessarily building on Bitcoin, but they at least haven't written it off, and they at least acknowledge that it's tough for us to climb forward if Bitcoin lags. And I don't think there's much evidence anymore for a flippening, and I also don't think that it's necessarily bad that Bitcoin has less upside, and I think there is a lot of value, and the most valuable network should be a proof of work consensus mechanism. And I think there's a lot of interesting things going on around Bitcoin. And the way to think about it is, what is the life cycle of a Bitcoiner and where does the innovation need to occur? So if I'm learning about, if I decide today I give up on the financial system, this doesn't make any sense. It's the user journey is learn about Bitcoin, set up an account on a centralized exchange, buy some of it, learn that you shouldn't sell it, borrow against it, maybe insure it, figure out how to hold it, and then eventually how do you will it to your heirs? So I think any innovation on that is necessary, and a lot of the infrastructure is being built today that I believe will become standards for the rest of our lifetimes. We need a couple years of that. Of those areas, I think the most interesting one is credit. It's moving, even as the price has been down and sideways, it's moving faster than I would have imagined. Rates are coming down. It's the most successful revenue stream for companies that do other things. Those that have exchanges, they're making more money in lending. And then I think their access to debt from capital providers is also increasing.
I'm just finishing up a call.
Whoops, you should have been muted. Hold on a second. Yeah.
Oh, no worries.
Yeah.
I
no,
think,
but that's
I think
super interesting. Yeah.
Yeah, I think what's missing from the credit stack is not demand. It's not the demand of Bitcoiners that want to borrow. It's certainly not the lack of demand from institutions that want to borrow, or that companies that have, say, over 1,000 Bitcoin in their treasury and want to borrow. I think the price is too prohibitive for the centralized lenders to borrow, but that is changing. And I think for me, I thought that this pace moved forward about a year, again, following Jack Muller's keynote in Vegas a month ago. The headline was the proposed merger. But what I found more interesting was now you can borrow at 7.5% on a term loan of greater than $5 million, which is unreal. And they announced a $2.1 billion credit facility from Tether with no cap. So they can upsize it as much as they need. And the hurdle rate for Tether is basically SOFR. It's basically Fed funds, right? So anything, you're seeing, I think, headwinds, and it's good for Bitcoin across the credit stack, where I think in a couple years, so maybe not a year from now, maybe 3 years from now, but eventually the all-in rate to borrow against Bitcoin will be SOFR +2, and the rate for the lenders borrowing from capital providers will be SOFR +1. So anybody who's involved is lucky to make a point, but the volumes will be so large.
Super interesting stuff, and particularly Tether. I mean, I think they've really emerged as kind of the king of crypto from the leading the decentralization part of it forward. RWA is great, but that's largely not decentralization.
Right. They also hold a lot of Bitcoin.
Exactly. So
Cool.
this was
Well,
awesome,
thanks so
Anthony.
much.
Thank you so much.
Thank
Yeah,
you,
thank you. It was a lot of fun.
Anthony.
Great to
That
meet
was
you all.
fascinating. Yeah. We'll recycle some of this, put it out into the media. So keep an eye on your X feed, because there'll be all these keen insights that you might have missed during the call that you'll see popping up during the day.
Thanks,
So
Anthony.
thank you, Anthony.
Thank you
And
so
thank you
much.
to all of you for being here today. Really appreciate it. It was an awesome call. Have a
Take
good one.
care.
Appreciate
Thank you,
everyone.
guys. Take care.
Bye.